Hi, this is Daniel, and you're watching Unrivaled Investing, a no-hype, mission-focused channel trying to find you exceptional companies and unrivaled investments. Normally, I'm looking for potential multi-baggers, types of stocks that could potentially go up hundreds or even thousands of percent. But today, we're actually taking a look at the macro. Normally, I try to ignore the macro. I don't want to hear it. I don't want to know what's going on in the macro. I want to find great companies. But sometimes the macro just sort of beats you over the head over and over again. And I'm like, okay, I got to pay attention to this. Maybe it's something like, oh my goodness, there's this COVID virus and like everything starts resetting. And you go, oh, okay, that's a big deal. Or all of a sudden you see a dramatic change in Federal Reserve policy. That's a big macro change. So you see these different types of developments, or maybe it's a tax code change. Sometimes you do need to understand what's going on in the macro to understand broadly what's going on in the market. And right now, I'm starting to see a macro impact with potential supply shocks, and I'm curious if this has the potential to actually crash the market. And you'll see this sort of logical framework that's making me nervous. And so I'm actually making this video not making a strong call saying like, oh yeah, this is definitively going to happen, but it's actually more of a question. I'm curious what your take is. And based on sort of the feedback and follow-up thoughts, I could do a follow-up video on sort of like, hey, what are the possibilities to do if this is the case? But right now I'm seeing sort of like this elevated risk of a supply shock that could lead to a market crash. Let's dive into this sort of understanding what am I talking about here, and what's actually driving this potential supply shock. And so first, I did a video recently called China Lights Out, effectively talking about how in addition to meeting tougher emission standards, by informally banning Australian thermal coal, China has effectively facing these blackouts, these critical shortages of energy resulting in blackouts around the country, and that's a big deal. It's a big deal because normally if one country goes offline, not a big deal. But when you are the largest trading partner with most countries around the world, that starts creating really nasty secondary effects where you just don't know, like, hey, all of a sudden, because you're no longer able to produce the normal 6 days a week and now you're down to 4 days because of energy issues, does this create global real risk shortages? And that's really the challenge of like, hey, are they manufacturing key parts that are part of this broader supply chain that all of a sudden some other thing will not work because of this? And Wall Street Journal actually had an article about this. China's power shortfall begins to ripple around the world. And it effectively calls out several different suppliers saying, yeah, we're seeing pushback from the manufacturers we rely on. And part of this is going to result in less supply. So this creates the supply shortages. And this the reason why this is a problem is you still have the same level of demand. You might actually have more demand just because of an economy rebounding. And so they're saying some consumer goods companies are looking at maybe 10, maybe even 15% price increases for their end goods because of the limited effectively the shortage, the reduction in manufacturing capacity that China is looking at because of this energy shortfall. So then you might go, well, wait a second, like, isn't this sort of a manufactured problem, manufactured crisis by China, sort of saying like, hey, we need to improve our emission standards, or we're in a trade war with Australia, which is really imprudent, but we're going to informally ban their thermal coal, and that's really what's driving it. So couldn't they just like fix this in a matter of weeks where, all of a sudden they could turn on the spigot and then all of a sudden, energy wouldn't be a problem for them and manufacturing gets right back up? Well, the reality is, I think the reason why this is a potential supply shock is because you're looking at a Lollapalooza. You're looking at multiple things all happening at the same time that's sort of screwing up the system. And it's normally a very, tight ship, very normally a tight operation. And then when you just start screwing things up on the margins, it has these big side effects, such as this huge cargo congestion. This is a Bloomberg article talking about how literally dozens of vessels, cargo ships, waiting off the port of Los Angeles. And they're also saying that China's trade gateways are also crowded too amid the peak season. Some people are saying like, hey, this is going to impact the major holiday season, just in terms of getting goods to and from. So then you're thinking, well, wait a second, why is that happening? So China, it's clearly not just a China energy problem. You're starting to layer on multiple different type of problems. It's like Tetris, and the pieces are just starting to come down, and you're like, oh crap, this is not right. This is, there's the potential for this supply shock. And so ports are getting clogged up partly in response to COVID. Some of it's social distancing protocols in response to COVID, where it's taking longer to load and offload goods. And part of this is because of unionized behaviors, sort of saying, hey, we got to keep our, employees, our union members safe. And so we're going to do whatever it takes to, protect them from COVID. And because of that, the response times, the turnaround times is taking longer. And if the turnaround times is going to take longer, that's also going to affect, other things like the truckers and their ability to pick up the loads. And so they're going to end up waiting. And if there's that congestion where more and more containers are stuck in the ports and more boats are just waiting to get offloaded, you're going to see a shortage in containers. Now, normally this is a very commoditized market, but you see that prices have gone exponentially in just the last few months. I mean, this is multiples in just the last few months for the normal 40-foot box. This is a game changer, folks, because this is real inflation for all those goods that are going to be getting shipped, to and from. All of a sudden saying it's going to cost a lot to get your cheap goods from around the world. This is not just a China problem you're starting to realize. You're saying, oh, smoke. This is connecting all these different dots. That's the potential for a real supply shock. And that's sort of the basis of this video. And I'm laying out these points because I'm curious to hear your feedback, to hear if you think, okay, Daniel, you're actually drawing the right dots. You agree this could lead potentially to a market crash. And I'll get to that key element of like, wait a second, how does this translate to a market crash shortly? But the problems compound further because not only do you have this port congestion, you are also having a shortage of freight drivers that are able to pick it up. This was actually a problem that started in 2019 where there are literally thousands of drivers that were needed. So there was already a shortage. Then it really came to a head with COVID where, you had some problems, with effectively, getting new commercial truckers approved because there were social distancing, licensing challenges where, hey, if you can't meet in person, it's tougher to get them in school and get them new licenses, and a tighter labor market as well, where folks are sort of saying, well, wait a second, these unemployment benefits, and is this really what I want to do? And so they're struggling to find enough bodies to be moving these trucks, these freight trucks, and so they've even talked about, hey, is it possible for us to lower the age limit from 21 to 18 so that way we can get more drivers on the road, moving this freight? So you're seeing a compounding of a problem, whether or not it's energy, the ports, or the freight drivers, one shortage after another, resulting in potentially a supply shock where there just isn't enough goods. And as if this wasn't bad enough, we might also start having to pay for years of underinvestment in energy. And I'm going to have a whole other video on this. I'm going to be interviewing Nelson, who I talked with him previously, and he effectively called this saying, look, there's a chance for an energy spike in the future. So we'll be talking with him later this week. And you're already starting to see that with Europe, where they're talking about how Europe's gas shortage could make the whole world pay more to get warm this winter. And they're talking about their amount in storage is now at a record low. So, folks are effectively saying, I hope this winter isn't bad, because if it is, you're going to have real problems. And this is not just folks like sort of saying, oh, I'm cold at home. How do we make sure I stay warm? This is also industries that need energy to operate, industries that need to produce things. You've seen weird side effects like steel producers in Europe saying, hey, we can't produce because either the energy costs went crazy or it's just not available to us. So this is so this is the dominoes falling. This is the Tetris game. All these pieces are coming together where it's like, oh, this isn't just one little thing. This snowballs into a much bigger problem. And so the reason why I'm sort of pulling these different strings and saying, wait a second, is there this possibility of a supply shock leading to a potential market crash? And I'm asking this, I'm putting this out there, and I definitely want your feedback in the comments below, is because you're even starting to see the pressure that Jerome Powell's facing at the Federal Reserve. And I would argue the Federal Reserve has been the key component driving U.S. returns for the better part of this past decade. Every time there was a problem, they were the ones that stepped up, with tons of quantitative easing. And they've had a radical policy, $120 billion per month for months now in response to COVID. I think they overdid it. And now the market's sort of saying, well, wait a second, when are they going to take their foot off the pedal? And they're saying, yeah, we're going to slowly do that over this next year. But he calls it out effectively. It's a difficult trade-off if inflation doesn't moderate. He has been saying, oh, yeah, it's transitory. It has not been transitory so far. And this is the reason why it's such a concern. What happens if you do have a supply shock? And so then there's fewer goods. You still have this huge amount of stimulus. The U.S. government is looking at record or incredible deficits that we're looking at. You still have this incredible amount of quantitative easing, a lot of new liquidity coming into the system. And you're looking at this and sort of saying, wait a second, supply's going down, the amount of dollars in the system's going up. What if inflation actually picks up from here? And if inflation picks up from here, is that, really a bigger problem? Because if inflation picks up from here, all this time that he's talking about it being transitory, it's like, oh my goodness, you now really have to accelerate the rate in which you cut your quantitative easing. And if you have to cut it sooner, and you have to say, you know what, we might actually have to flip to tightening sooner because inflation is getting really hot. Like if inflation surprises even more to the upside in the months ahead because of a supply shock like this, then I think the markets do reset. And that's the challenge. That's the concern that I'm looking at this sort of lollapalooza of supply concerns. This is not me trying to say, oh, I'm trying to create fear or anything like that. I'm saying these are the data points I'm looking at. What do you think I'm missing? Because I strongly believe the Federal Reserve is really responsible for what's been going on with this market in terms of like, hey, every time there's a problem, let's just print money. Let's have that liquidity. And could this sort of these actions, imagine if there is an energy shock, could these actions lead to a position where the Federal Reserve is now effectively, they're powerless. They're now in a position where they're saying we can't do any more quantitative easing because inflation rate has gone up because of these shortages. I mean, keep in mind, the Federal Reserve is already in a tight spot because they've had what I'd argue incredible corruption that you've seen with several Federal Reserve, members, like effectively trading securities that then got purchased by the Federal Reserve, like enriching themselves. And there's been 2 resignations so far. Like this does not help the cause. Meanwhile, the politicians are going to see that inflation. If you have an energy shock, then people will get really nervous. So these are the data points that I'm sort of looking at, sort of saying, well, wait a second, that if you lose that support, where all of a sudden the market has constantly rallied, partly because they go, oh, the Federal Reserve's got my back. Well, if you reach a period where, oh, the Federal Reserve does not have my back because they can no longer be as aggressive because inflation has gone on too long and it's well beyond that transitory and it's above that 2% threshold. If you have that problem and the supply shocks usually lead to much higher inflation. So you see these elements. And that's sort of what's making me nervous is when you start seeing inflation really start picking up, that's when valuations sort of reset. So I'm looking at this. I'm on edge looking at this. And so I'm very curious once again to hear your thoughts. What I've slowly done, and I could do a whole separate video on what to consider doing if this indeed does start playing out. What I've personally done, as Journey subscribers know, is I'm balancing out my portfolio not only with hyper growth names. I've called out a couple of multi-baggers for Journey subscribers that are growing like 100% plus that should continue to grow, like regardless of the economy. One of them is a healthcare play that's just crushing it, that's growing over 100%. But another is a healthcare play that trades at like 8 to 10 times free cash flow. And so my view is like, yeah, even if you do have a supply shock leading to above average inflation, yeah, the healthcare industry still needs to operate. People still need to get their medicine, for example. And so that's, those are the elements that I'm thinking about. So anywho, if this video has been helpful for you, I definitely want to hear your thoughts. But if it's been helpful for you, please make a point of hitting subscribe, hit that subscribe button, hit that thumbs up. If this is your first time tuning in, my name is Daniel, and you are watching Unrivaled Investing. Thanks so much for watching.